Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. Hope you're doing well on this fine Friday weekend or weekday, whenever it is that you're watching. If you're new here, every single Friday I break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. And in today's episode, we're talking about the Chainlink price explosion lately, Algorand, Bitcoin's price, and of course, our usual 404 Logic Not Found segment, which I think today is especially awesome. But before we get into all of that stuff, let's kick it off with questions from the community on YouTube and Twitter. So I'll pull those up right now here on the computer. And if you want one of your questions answered, make sure to leave them in the comments down below or tweet me at Hashoshi4 on Twitter, of course. If you would be so inclined to, please do subscribe to the channel and hit that little bell notification button down there so you can get a heads up whenever I post new content here on the channel. All right, let's take a look at the questions for today. So I have one here from asterisk. That's literally what the name is. He says, I'm not sure why this is something I should buy. The main benefit is it just to have one simple address to send and receive all crypto. Do you link it to a bank account? Can you resell the domain? And so all of this is about unstoppable domains, which, as you know, I'm a big fan of. I've followed them since the very beginning, and I do think their product is super high quality, and I think they've just continued to build cool stuff. But the main benefit, first of all, is you have a human readable name that you can map to a wide variety of crypto addresses. So not just one, not just a couple, but as many as you want, which is great. So you go into a wallet and you say, I want to send to my friend John.crypto. You type it in, it's human readable. It's just like a username instead of having to deal with the long strings that are crypto addresses. You don't link to a bank account. You can pay for those domains with crypto, so it's not linked to any credit card or debit card, but you can also pay with credit or debit if you want. And you can resell the domain name, although it is yours for life if you want to. You can auction it off just like any other domain. And really, the benefits are these domains are giving an exceptionally growing list of different Web3 or next generation decentralized technologies to you as a service, right? So you can use your domain now to create a decentralized website, which I have at Hashoshi.crypto. You can use it to create a decentralized blog, which is very similar. I have one as well. You can use it to do encrypted chat, which I talked about last week. So there's more and more things you can do with your domain, and that's why I love it so much. So if you're interested, I'll leave a link down to Unstoppable Domains down below. Thank you for your question. I am not I asks, could you speak at some point to the potential problems of cashing out your crypto from an exchange when things start to skyrocket? Will exchanges allow you to withdraw 100K or more at a time? So it depends on the exchange, and it depends on what level of KYC you've done, I'm sure. I know that Coinbase has a 10K limit per day, I think. There are other exchanges like Kraken that have higher limits. I think you can do 100K maybe per month. They're all different, and so you have to take a look at that and see at the level of KYC that I'm doing or willing to do, what are my withdrawal limits? How long do those withdrawals take? Those are all things to keep in mind. But yes, make sure you bear in mind what types of withdrawals you're going to make before you decide which exchange. And don't keep your crypto on exchanges at all. So you should be able to pick where you want to use as your off-ramp if it's time to sell. All right, let's see what we've got here. All right, we've got another questions from Aditya Nayar. Any thoughts about the Comp DeFi token? Is it the best DeFi token for investment? Now, I can't give you investment advice. That's not what this channel is about. But I will tell you that Compound is an interesting thing. It's an interesting phenomenon because Compound was one of those coins that went way crazy. It doubled in price in a very short amount of time because it is very useful. Compound is great for swaps. It's a great DeFi product in general. Do I think it's the best investment in the world? I couldn't tell you that. But what I will say is that Compound, Kyber, Uniswap, these are services that are going to continue to grab market share because they're very well established. There's a lot of access to their token. Coinbase is a known purveyor of Compound and Kyber. And so I would expect those to continue to do very well as long as there are no notable breaches or hacks or issues with their products. So Compound is a solid DeFi token. It's a solid DeFi project, but your mileage may vary. So thank you for your question there. Now let's go to the next question. which is from Crypto Ping Pong. If it's true, every time you say Bitcoin's going to go down, it goes up. Please say it's going to go down $3,000, then it might go up. Yeah, agreed. I'm always like the reverse indicator on these videos, it seems. Do you know what the reason is for the major fluctuations in Ethereum's gas prices lately? I actually think it's a result of two things. I think there's a lot of traffic and a lot of stuff going on Ethereum right now. There are a lot of transactions, and DeFi is making that situation worse. Even though these transactions for DeFi are relatively small, they're relatively cheap, there are a lot of them. And so there's a lot less space in each block and in each contract execution block to do what things that need to be done, right? So gas prices are high, and a lot of dApps are kind of paying the price for that, literally and figuratively, because it's becoming very expensive to run these dApps in the first place. So I think that's something we need to watch, and it just proves that we need ETH 2.0 because this is not scalable. DeFi is a little baby, and if this is going to make it anywhere from here, we've got to make it cheaper to run, cheaper to operate. Just today, I issued 4 transactions while interacting with a dApp. It cost me $10 US. $10 US to interact with the dApp. That can't happen. So yeah, it's going to have to change. Larry Bogut's asked, in your latest Crypto Over Coffee episode 22, you mentioned AI will be an essential element to successful smart contract utilization, blockchain utilization. Are you aware of any crypto-based AI systems that are poised to fulfill that requirement? As of yet, no, but I have seen projects starting to incorporate that a little bit. Project Aeon, or now I think it's AON now, they integrated conceptually AI or machine learning models into their consensus mechanism. So proof of work was being used to perform actual utility in the network, right? So when you're doing these computations and you're introducing cost to prevent Sybil attacks, they were doing something for a cause, right? They were training machine learning models, developing artificial intelligence models in doing so. And so I think that's a really interesting way, but it's not necessarily directed at making consensus better. It's just directing all that computing power at something that's useful. So I think these startups have yet to be created. And if there are any, please let me know in the comments below. Next question is from Financial Freedom. Do you ever see Cardano getting as much adoption as ETH? The answer is maybe, and it's going to be a really challenging path to getting there if they do. Because ultimately, the first mover advantage is real for Ethereum because Solidity has been around for a long time, so they have a head start. Developers know Solidity. People have built profitable products on Ethereum using Solidity, and so it's going to be hard to get people away from what they already know. But there is an opportunity here to take a brand new developer community out of the Haskell developer community, get people to build dApps that are very valuable, to show that all the work that's been done and all the time that we've had to wait for Cardano's mainnet has been worth it. And so the answer is it could happen, but I think Cardano is in a similar position to a lot of the other networks in this niche where they have to prove their value and they have to get developers on board. If you don't have new products being built that people care about, you're cooked. So I think that's what they're going to have to do. Thank you for your question. Now let's go on here. I think the only other thing that I wanted to do before we dive into the news actually is I wanted to announce the winners from last week's Unstoppable Domains DChat giveaway. So I encouraged people last week to reach out to me on DChat, the new end-to-end encrypted chat that Unstoppable Domains has released. And I said a few people, or a couple people rather, that did send me a message would be entered to win some Ether. So I'm going to send a couple people Ether right after this video. And I wanted to announce the winners are blockchainoftrust.crypto. Congratulations, you won some ETH. Thanks for sending me a message. And also we've got honorhiminall.crypto. I wanted to make sure I got these names right, so I wrote them down. Thank you to both of you, and thank you to everyone who messaged me on the Unstoppable Domains DChat. Now let's dive into the news. Now I have to talk about Chainlink today because it's more than doubled from its price earlier this year, and people want to know what's going on. Now here are my thoughts. Quite frankly, Chainlink is, of course, one of the most hyped projects out there. There's no doubt about that, and that certainly plays into the price action. Whenever there's a move, a literal army of people, the Link Marines, I guess they're called, are there to pile on the praise and move it forward. Now, this is not a cut on these folks. It's not a cut on this community because it's a great community. They should be prideful in this project because it is top quality. It is solving a real problem in the space, and I think it's a good project. That being said, when hype drives price, it causes uneducated people to buy the top and then get dumped on. And so that's a problem that we need to be aware of, despite the fact that Chainlink deserves the success that it's getting. But why is the price moving now of all times? Well, first of all, I think there's a growing anticipation of the exciting staking and governance features that Chainlink has in its spec, which would give the Link token a whole new level of utility for holders, especially the casual ones, and more so the people who are really involved. And really, the staking functionality is the largest outstanding item that needs to be released into the main implementation of the network. Now, obviously, there's much more work to be done after that, but staking is huge. I think this is the driving force behind the demand, that anticipation. But I also think that a lot of the work being done in partnership with DeFi projects, especially in order to provide tamper-proof and secure price feed data going into these smart contracts, is pushing up the demand and the hype about Chainlink big time. The association with what is the hottest topic, DeFi, is big. Now, the flash loan attacks a while back prompted services to opt for Chainlink to prevent price manipulation attacks. And many DeFi projects on Ethereum and other chains too have been opting for Chainlink in a very public way for their oracles. This in and of itself is a value driver for the project. So all in all, I'm a fan of Chainlink. As you probably know, I've made videos about it. I love the project. And I think it deserves price growth. There's no doubt about that. But that said, too much too fast can be a problem. So hopefully price does not outstrip demand too much. In terms of Bitcoin, my analysis remains largely the same right now because we're in a somewhat historic period of low volatility. It's gotten to the point now where people actually enjoy a dip in price because it starts to move and there's actually something to talk about, which we did get actually at the end of the day on Thursday, I guess yesterday at the time of recording here in the US, with prices dipping into the 8,000s. Now that said, this newfound stability, even though it's below the beloved 10K mark, it's just furthering the narrative that Bitcoin is starting to become more and more suitable in its name, digital gold. Now, if the value starts to rise more steadily over time, rather than having these huge, massive spurts all the way up in terms of growth and then retracement at a rapid pace, it may finally get the respect of institutional investors and traditionalists who always say it's too volatile. Now, it'll take away that major argument that people have against Bitcoin in this context. So I think that's pretty interesting. But what do you think? Comment below and let me know what you think about Bitcoin's price these days and how it's fitting that narrative of digital gold. That said, I'm concerned that the prevalence of scams using Bitcoin are undoing some of that positive narrative and starting to blur the lines with some negative stuff. Now, I get that Bitcoin is not directly responsible, but the media doesn't get that, nor do average people. The situation on YouTube is worsening with scams asking for Bitcoin and taking Bitcoin from unsuspecting people, and the Twitter hack just made that 10 times worse. I fear that this is a huge problem for Bitcoin and crypto at large, to be honest, that we have to solve. And speaking of that, it is time for 404 Logic Not Found. For those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. And speaking of attention, if you want to help this video get some attention from the YouTube algorithm gods, please do hit that like button on my behalf. It's down there below the video. Thank you in advance for that. Now, you can probably guess where my focus is going to be today. Yes, Twitter. On Wednesday, Twitter erupted into chaos as a multitude of verified blue check accounts were used to tweet out a massive Bitcoin scam, asking users to send Bitcoin to a given address to receive double Bitcoin back. Notable folks like Elon Musk, Bill Gates, Barack Obama, Joe Biden, and more had their accounts taken over to propagate this scam, ensnaring quite a few unsuspecting people. This hacker made away with at least $100,000 in Bitcoin. And to be candid with you, there's likely a lot more stolen Bitcoin that has as of yet been unaccounted for. And the fact of the matter is, how in the world were some of the most notable and high-profile individuals' accounts all stolen at the same time? Just think about it. Are they simply bad at securing their own accounts? Did they not use two-factor authentication? Did everyone get SIM swapped? What happened? Well, we're starting to unravel that mystery now, and apparently a Twitter employee with access to internal account management tools was befriended by the would-be hacker and bribed to give access to those internal tools within the company. Now, using these tools, the hacker was able to disable 2FA, take over these blue check accounts, and carry out the spam attack. Now, if this is the exact path the hacker took, which it seems to be, we're not sure, but it seems to be, this is not a complex or highly sophisticated hack. It hardly even had a technical component to it. There wasn't code, there wasn't crunching. This was a social engineering attack top to bottom. Now, it's a bona fide example of how centralization in technology leads to pain and vulnerability, giving employees what I like to call God mode, where they can create, update, delete, or modify accounts and critical data at will using their login credentials. It's just a bad idea. Now, we're now at the point in society where centralized governance of technology is a major cybersecurity risk that is not immediately solvable with just rules and policies alone. You can make as many rules as you want, but it's not going to stop these types of attacks from happening. Let me be clear, this is not an issue unique to Twitter. This is happening everywhere. It's likely, though, that for less than $5,000, a hacker took over accounts of some of the most prominent public figures in society today. We are lucky, in fact, blessed, that this was a financially motivated attack, to be frank, and that the tweets were used and so clearly out of character for these accounts to take Bitcoin and not to cause chaos. Imagine if these accounts were used to masquerade as CEOs to tweet something incriminating, or as politicians to declare war. One tweet could cause catastrophe in the stock market, in society, and in the world at large. This could have been so much worse, but it's time for change. Centralized systems have had their day. You're trading the ability to censor and fix problems for users who mess up their accounts, but that's a worthy trade-off to prevent global hacks like this from causing much bigger problems than just some stolen Bitcoin. Twitter and the rest of the tech world can do better. It has to do better. 404, logic not found. You know what? Actually, I've got two of these today. I can't resist. I need to give this one as well. In response to the Twitter hack on Wednesday, the famed Bitcoin critic Peter Schiff took to, Twitter again to spout delusional nonsense about Bitcoin and hype up his beloved gold. I mean, what else is new? I quote, this is what he said. This is a tweet. It looks like all verified Twitter accounts have been hacked by someone running a hashtag Bitcoin scam. For once, not being verified has its advantages. He meant advantages. I wonder if this is a harbinger of Bitcoin itself being hacked. Better to play it safe and just buy hashtag gold. Notwithstanding the egregious spelling error in there, this entire tweet is completely disconnected from fact. It's delusional. Twitter was hacked, not Bitcoin. And there was not only zero evidence of any hack related to Bitcoin itself. If Bitcoin were being hacked, why would the person ask for Bitcoin from people? The stupidity in this tweet is just beyond me. I mean, I can tell you one good reason why the hacker didn't ask for gold. They probably just didn't want to wait 2 to 5 days for shipping. 404, logic not found. Ouch. Anyways, moving on. For fans of Algorand, some big news came out Thursday about Algorand's cryptocurrency Algo being available on Coinbase. Now, we all know that Coinbase is a controversial topic these days, and well, it has been always, really. But there's an argument that any asset being listed on Coinbase is a relatively good thing for the project. It gives access to the hundreds of thousands, if not millions of people who do not care about Coinbase's dealings with the government or that they're centralized and prefer to buy assets there rather than any other exchange. And to be honest with you, access is almost everything these days. Exchange listings can make or break a project. Now, for any proof of stake network, it could be argued that the more easily users can obtain the coin or token, the better they are, because it's more likely that they will be able to stake it. Of course, this is really only true if the user then pulls the coins off of Coinbase and stakes themselves. Otherwise, it's arguably not that great because you want individual users contributing to security in the network, but that's a separate topic. That being said, I think this simply reaffirms Coinbase's profit strategy going forward from here on out. They will likely try to reduce fees and things that are related to buys and withdrawals and rather earn major money on staking on behalf of their users. Coinbase already makes a ton of money baking Tezos on Tezos, and they've added Link, which will soon allow for staking as well. We talked about that before. And there are rumors that Cardano's ADA will be added as staking comes into the mix there. And now Algorand is the latest to the staking party on Coinbase, and it should be no surprise, this is their new profit strategy. So it's really, really interesting, but I want to just remind you, remember folks, not your keys, not your crypto. Don't let Coinbase eat your lunch. It's not hard to stake on your own. Get a hardware wallet, stake it cold, do your own thing, you'll make more anyways. Now, speaking of Coinbase, let's touch on the conspiracies and controversies there. Reports came out this past week that Coinbase is selling the IRS and other agencies in the US government crypto analytics software. This means that very likely Coinbase is selling access to an analytics tool that pulls from data Coinbase collects and has built about cryptocurrency interactions and data on multiple blockchains and cryptocurrency networks at large. Of course, we don't know precisely what data is being shared and in what format, and that's the main reason there's an even larger uproar than there was before when rumors were swirling around. Of course, the explanation from Coinbase themselves is that the software is used to track movements of cryptocurrency used by prospective criminals across blockchain networks around the world. So take that for what you will. Obviously, people say, okay, well, that's great, but where's the line? How do you determine who's a criminal and who's not? We totally get that. However, I'd like to offer up this rather blunt opinion. Are you surprised that this is happening? I'm definitely not. We should have all expected this to happen. Coinbase is a highly regulated financial institution, crypto or not, and they're reportedly preparing for an IPO. Not only that, they have a treasure trove of data about cryptocurrency as one of the longest standing exchanges in the world with some of the largest number of users in the world. This is what Coinbase does. They toe the line between the decentralized world of crypto here and the old world of finance here. The old world of finance has no issue selling tools and data to the government for profit at all. No concern whatsoever, especially when there's a reason behind it that they're trying to help stop criminals. This is as clear as day. So if you disagree with what they're doing, you should exercise your right to boycott their services, but no one should be surprised that this is happening. And quite frankly, we should all just move on with our lives. But anyways, guys, thank you so much for watching. If you want to keep the party started, I will link up an awesome video actually explaining all about what Chainlink does, one of the most hyped projects to date, and hopefully you'll get some value out of that. But regardless of whether or not you have time to stick around, thanks so much for watching this video. I hope you and your family have a fantastic weekend, and I want to wish on the airwaves my girlfriend a wonderful, wonderful birthday, which is today on Friday. So thanks so much for watching. Cheers.